If you're advertising, how much should you spend per lead? What should your cost per lead be? And is there such an answer based on your industry, your service? And the answer is yes. In this video, I'm going to show you 100%. You will know how much you should be spending per lead. No more questioning, is the leads too much or too little? Should I spend $5 a lead, $10 a lead, $100 a lead? What's the magic number? And there is a magic number. I'm going to show you how you can work out your magic number and how you can put a stop loss in Facebook so you never go over that magic number and you always will stay wildly profitable. This video is all about unit economics. It's not going to be a sexy video. I'm going to be honest. Most people will probably click off this because they're like, this is not the sexy stuff. There's no Lambos in this, nothing like that. But if you're a diehard CEO that wants to grow your company to 100,000 a month or 300, 500 or beyond, these are the numbers that every person I know that's working at that upper echelon, they know these numbers. And so I'm going to show you how to get there. And now most people think about the important number is cost per acquisition, right? Which is an important number. I'm going to go through that too. But there's actually another number that's more important in order to know how much you can spend on ads and how to set a stop loss. And that's known as EPL. I'm going to dive into that in one moment. But let's go through a bit of an exercise here. Let's begin. Here's a thought. If you've got 100 leads, but only 2 sales, does that make you happy or not? Is that a good thing or a bad thing if you generated 100 leads, but you only got 2 sales? Well, I would say it depends on unit economics and understanding that, because it's really at the end of the day, not about some vanity metric or I've got 100 leads, I've got 80 clients. It's about, is it profitable or not? So in the world of marketing, success isn't solely measured by how little you spend per lead. The true metric of success lies in understanding the full spectrum of your key performance indicators that influence the profitability of your campaign. And so in this video, I'm going to break down the necessary KPIs, the financial insights that every CEO should monitor to make data-driven decisions rather than just relying on feelings, right? Because a lot of times when I talk to business owners and they go, oh, I want the leads to be $10, $5 or $50, it's based on feelings. And that often comes from when we don't know what to ask for, we don't know what we should know or do know, then the problem is we don't know how to make it an informed statement or opposed to just something that we feel on, which is okay. But by the end of this video, you're going to be crystal clear. So let's have a look at a few things first. Bit of a background here. I just want to make sure that we're all on the same page so it all kind of makes sense. But let's talk about some key performance indicators. So first of all, this is about this is for professional service-based businesses that are either coaches, consultants, or agencies. So consultants meaning anything that's service-based, professional services like financial planners, mortgage brokers, coaches, life coaches, business coaches, anyone where you provide a service or you sell a high-ticket item, right? Could be kitchen renovations. You're selling a kitchen for $15,000. And these numbers are based on the fact that you need to have a face-to-face because it is high-ticket, right? So it's going to be something that's $3,000 or more. And you're looking at running advertising to get a qualified book call on your calendar and have a meeting with that person and, of course, convert them into a sale. So let's have a look at some KPIs, right? Now, each of these KPIs is worthless. So if you're just looking at cost per lead, it's worthless because they all synergistically work together to form a bigger picture. And that's what you need to understand. You need to look at your business as a whole opposed to just one metric. It doesn't give you enough. If you're just looking at one metric, it means you don't know what you're doing. Sorry, truth. You don't know what you're doing if you're just focusing on one metric. You need to look at all these metrics because it can tell you where something's broken. But too often, I see people, they break down in their car, they've got a flat tire, and they're changing the brakes. What's the point? And that's the problem. So let's go through this. You've got cost per lead, pretty straightforward. That can range from $5 less per lead to $50, can be $200 a lead. Depends on your industry and what you're advertising, what your TAM is. In other words, your total addressable market. If you're going advertising in a country, It's going to be probably a lesser cost per lead than if you're targeting a radius of 2 kilometers. Kind of makes sense. All right, then we'll look at cost per book call. How much does it cost to get a call booked on your calendar? So if all things go right, you've got a lead coming in, I'm assuming you've got an engagement funnel, whether you've got appointment setters, an AI sales bot, or you've got some engagement emails, then nurturing, building some trust, and motivating these people to book on your calendar with some qualification questions, right? So you've got a book call, and that can range from $30 or less or all the way up to $500 a book call. And that's cool because your service might be $20,000 or $30,000. We'll get to that. We'll talk about that in a minute. Cost per show call. There's a difference. I often get asked, what's the difference? Cost, book call, show. Well, there's a show up rate. Not everybody shows up to your call. You might get 10 people book in and maybe 6 or 7 show up. Maybe 8 show up, maybe 5 show up. Again, numbers you need to understand as a CEO, right? Here's the thing. I speak to professional service providers all the time. Financial planners, mortgage brokers, business coaches, whatever. And when I ask them what business they're in, if it's a financial planner, they'll say to me, I'm a financial planner. And I have to correct them every time that they're not a financial planner. You're a financial planner if you work for someone. But if you come to me as a business owner, you're not a financial planner. Financial planning is your business, but you are a CEO. You're a business operator. And so your job title has shifted. And a function of that, yes, is financial planning, but you need to be and have the skill set and the awareness that you're now looking at marketing, sales, and operations. And if you're not really being a competent business operator, and therefore you may be failing if you're just focusing on your industry. So as soon as you've taken that step to becoming self-employed, all right? Self-employed to me means one-man band, you are the business, and you're shifting towards being a business owner, systems and team, you need to be across this. So it's important to go through this. Cost per book call, cost per show rate, and then you've got your sales conversion rate, right? So let's say you've got 4 people that show up that you have a chat with, and you present to one and they convert, right? Let's say you present to all, but one converts. Well, then your conversion rate's 25%. And so there's the biggest constraint with most business owners that transition from referrals to paid advertising, that don't know how to overcome the trust factor and a few other components. And this is where oftentimes it can get very bad for business owners when they haven't got their sales process sorted. So having all these run down, leads coming in, they're booked on the calendar to show up, you convert them, there now is your cost per acquisition. So let's just say the overall cost to acquire customer through your funnel can span from $200 that you bought a customer for all the way to $3,000 to acquire a customer. It's heavily influenced by your service price point, and it determines also the profitability of your campaign. You can pay $3,000 a client and be highly profitable. You can pay $200 and have a losing business. So how's CPA determined? So if you had 100 leads come in and 10 booked in for an appointment, 5 showed up, and you sold 1 into your service, then the data would look like this. 100 leads times $10 is $1,000 CPA. That's what it cost you. $1,000 to acquire a customer. So which one's better? Like I just talked about, $200 or $3,000? Well, it depends on your P&L, right? Because $200 would be bad if your service that you're selling only makes you $200. You've spent $200, it costs you $200 to acquire the customer, you've made no profit. And you've got nothing left for your own income, labor costs, running costs, nothing. It's a losing business. But if you spend $3,000 acquiring a customer, and let's say I've got some clients that work in property advisory or something else, and they're making $15,000 back. Well, you spend $3K, you make $15K back. That means for every dollar spent, you got $5 back. Well, in that example, the 200 CPA, right? The ROAS would be as follows, like I've just mentioned, making zero money, 1-1. But on the other one, the $3,000 one, it's a 1 to 5, right? It is hugely profitable. That means cost of goods sold to get that client in, your marketing costs were only 20%. That leaves you 80% on your P&L. Very important. We'll come back to that. So focus on the profitability of the campaign, not how many leads did not convert. What do I mean by that? So I often speak to business owners and they run a really highly profitable campaign. They might spend $1 and get $10 back. Amazing. You can scale it to the moon. And they'll say to me, but Andrew, I got 100 leads and 90 didn't convert. What about the other 90? And they focus on the wrong thing. When you go to the open market, you're always going to attract people that shouldn't be there. Looky-loos. Oh, I made a mistake. I thought I was this. Oh, fumbled my way through a submit button. Whatever. It's no different than when you're at a shopping center and you've got the doors open and 500 people walk through and they're just having a look around and they're walking back out. You don't yell at these people and go, get out of my store. They might come back another time, right? A percentage will buy that comes through the store. It's like that with advertising. But a lot of people get a misunderstanding of that when they're used to working with referrals where 9 out of 10 go through and that one that doesn't is because it probably doesn't qualify. So there comes a customization to it. And you need to customize yourself to how it commercially works in advertising. Most of the leads won't become clients. And that's okay if you're highly profitable. I mean, what are you optimizing for? A vanity metric or making money? So you need to understand that. So in order to determine a successful campaign, one must look at the overall P&L. So you need to look at your business and see how the cost per acquisition fits into the larger picture. So cost per acquisition is also known as COGS, cost of goods sold. That would take into account your marketing, and if you've got a salesperson, they're also in that. So if you're paying a salesperson, keep it simple, 10%, and it costs you 30% to acquire the customer out of your P&L, right? Then you've got a 40% COGS. Now, as I've just mentioned, open market, you will attract looky-loos, time wasters. Don't worry about it. The purpose of an automated funnel, an AI sales agent, and a team of appointment setters is to filter everything for you so you end up with booked appointments on your calendar without you putting more time in, so you can focus on those booked meetings and have a meaningful conversation, right? To turn them into clients. So let's understand this a bit closer. Let's just say for a moment, if we look at unit economics, and this is really important because a lot of people don't understand, you need to tie in your advertising cost, your cost per lead, book calls, conversion. This part fits in to the larger picture of the operations of your business. Because if you don't look at it like that, how do you know whether what you're doing is profitable? A $5 lead might sound sexy, and I can tell you a quick story. I worked with a financial planner once who got on the call with me, his initial call, and he's telling me something like, I'm trying to remember here, but it's something like, let's say, I'm getting $10 leads. Awesome. Hey, just seeing if you can do better. And I was like, cool, let's have a talk about that. Out of those $10 leads, how many turned into appointments? And he looked at me and he's like, I don't know. Okay, how many of those $10 leads turn into clients? He goes, I don't know. I go, what else you got going on in your business? He goes, well, I do some radio advertising, I do SEO, I've got the Facebook ad running. I go, you don't track anything? He's like, no. I said, so I know it sounds sexy, $10 leads, but what if none of them become clients? Isn't that a lot of waste? Or what if if the majority of your business comes from Facebook ads, let's say, so these $10 leads might be amazing, but you're wasting your money on the radio ads or the SEO. If you're not tracking, as Peter Drucker said, what gets measured gets managed. So just understand that. So if we look at it like unit economics, your P&L, we're going to look at two parts of it first of all. You've got your COGS, right? Cost of goods sold, and that leaves you with GP, gross profit. Now, the maximum, if you're a professional service-based business, you probably want to look at, but every business is different, disclaimer, you want to look at probably at about a breaching point of 40%, meaning I allow up to 40% COGS, cost of goods sold, including salespeople I've got to pay, plus the advertising costs, right? And that leaves me 60% GP. Out of that 60% GP, I can pay my labor costs, my running costs, my staff costs, my income, and then that leaves me with a profit. Great. If all these numbers stack up and I keep my COGS below 40%, I know I'm good. I can scale. The only issue I will have is fulfillment. I've got to keep hiring staff or systems or whatever it might be. Different story. But this is where it becomes really interesting to understand that you need to sit down with a piece of paper and understand your overall numbers. Okay? So what that means is if we look at your cost of goods sold, 40% or lower, and allowing for a GP of 60%, that in that GP, then you've got your fixed costs, your labor and income, and that should leave you with 10 to 50% of profit margins, right? And I say 50% because your COGS might be only 20%, right? So there's variables here. Now, the role of return of ad spend. So ROAS, people have heard that a lot. It means return on ad spend. So in this example of 40%, that means your return of ad spend should be at least 1 to 2.5. Meaning for every dollar spent, you've got to get back at least $2.50 to stay at that 40% or below. Right? Watch this again if you need to get a calculator and kind of make sense. But if I'm saying that you should be at 40% or lower, then it's really important that you, for every dollar goes in, you make at least $2.50 back to stay below that 40%, right? That's what we've got here. The 1.25, 1 to 2.5 ratio, which is 40% COGS. Now, you've got to get this at a minimum in what I found in working with thousands of business owners over all my years to be profitable. So in the beginning, when you launch a new campaign, just be mindful, right? You're probably going to be backwards. You might not even make back your money. And that's why is that? Because you haven't optimized or validated. So we get this a lot with clients. We first launched them, and within the first week, they're like, where's my clients? And it's like, what are you talking about? We just got the inquiries. We're going to get them nurtured, go on. You've got no idea yet really how to do the sales process unless you've been highly trained and you've done role playing and you've recorded your calls and you've gone through that process. We want to make sure we validate and optimize the bookings, the show rate. That's what's called the validation period. But you should within very quickly, if everything gets dialed in, move towards validation complete, and now you can scale. Scaling means, which brings up the other point, you've got to have some sales trackers and marketing trackers. If you don't have them, reach out to us. I'll send them to you, the Excel spreadsheets. You can put in your cost per lead and everything else, your book course, and it calculates for you your ROAS and everything. Just pop that in the comments below and we can get that over to you. Not a problem. So the other thing is, from a planning point of view, you've got to determine your CPA, because knowing that, it sets your threshold, right, for having a profitable CPA. You can work out how much can you spend on cost per acquisition, right? So that way you can also tailor your KPIs. See, too many people try and squeeze everything out of cost per lead. I'm getting $15 leads. I'm trying to get them to $12. I'm trying to get them to $8. And if you already maximized or optimized on your ads, it's much harder to squeeze out another 3, 4, 5%. Whereas if your sales, you're converting at 5% or 10%, it's much easier to move that to 20% from 10, and you've doubled your revenue. So a lot of people focus on the wrong constraint in their entire customer journey pipeline. Don't do that. Now, another important point, you need to look at to make sure that your business is running efficiently. You might have a broken model. If you're playing the game too small, and what I mean by that is this. Let's say you look at your overall P&L, and if you're at 10K a month, you want to get out of that really fast. That's the death zone, right? You talk about Mount Everest, climbing Mount Everest, right? You're the death zone. 10K a month or below, you're in the death zone. Why? Because if you got to draw an income as the business owner, and you're drawing income to be $100,000 a year, which is $8,000, that means out of your P&L, you as the single person represent 80%. There's nothing left to run the business, to grow the business, unless you have got cash or access to credit to put in to get the right systems to get to 20K as fast as possible and 30K, so the numbers make more sense. So if you're playing the game too small, you're in the death valley. And this is why so many businesses fail every week. They stay there too long. It's the burnout zone because you're doing everything yourself and no one can stay there forever. And secondly, you're just not running efficiently. So because if your COGS, as I said, is 30%, that's under 40%, that's good. But if your labor costs are 70% and your business running costs are 30%, then you don't have a marketing problem. You have an efficiently run business problem that you need to fix. So sometimes it is also a situation of playing the game of the business too small, which I've just mentioned. You only make 10K per month and your salary is 8. As I've just said, 8 is going to be P&L. It's a losing situation. You don't have a marketing problem. You've got a different problem. Well, you may have both. So this is why a business must grow. All right, conclusion. I'm about to give you the best metric to follow. As I've said before, in the beginning of this video, I'm going to give you the magic number of how much you should spend per lead. So we'll get there right now. Now, conclusion. Understanding the economic fundamentals behind advertising allows a CEO to transform advertising from a cost center to a profit-generating activity. All right. I hope by now you can see that. You got to focus on your financial analytics, your KPIs. They're all important, not just one, and they need to fit into the bigger picture. How much does it cost me to acquire a customer? And is it at 40% or below? Hopefully much lower, so you can scale. Ideally, you want to be at 10 or 20%. That means you're at like 10x or 5x, and you can pump more money into ads, and you're just printing money. So here's the other thing, as I said, you're not a service provider anymore. You're now a business owner, all right? So you need to be just understanding that you need to have some proficiency in all aspects of marketing, sales, operations, HR, finance, because if you don't, you're going to go under. You will. So, all right, let's go to what I just said. How much, going back and paying off on how this video started, how much should you pay per lead? Let me introduce you to the most important number. Some people say it's cost per acquisition. And yeah, that's an important number. But the one that really is a standout for me is EPL. EPL is earnings per lead. If you know that number, then you know how much you can spend on lead generation. You don't have to worry about anything else. It comes though that you have to do tracking to understand all these numbers first. You need to know your cost per acquisition. Once you do, this is how you work it out, and this is how you use it in advertising. So stick with me and watch this video again if it takes a little bit to click. So earnings per lead is this. Let's just say, to keep the mathematics simple, your service is $10,000 and you're generating leads at $50 each. And let's say you've generated 100 leads times 50 is $5,000. Okay? So you have spent $5,000 on lead gen, you got 100 leads. And let's say you got 2 clients out of that. So that means out of the $5,000 cost, you got 2 clients divided by 2. That means your CPA, your cost per acquisition, is $2,500. So far, so good. That means $2,500 to get $10,000 back. That's a rise of 1 to 4. You can scale this. Your cost of goods sold is what? 25% on your P&L. What do we say? Anything below 40%? Amazing if your business is running proficiently. Right, so now how do you calculate earnings per lead? Well, if you took that 50 leads, we now know out of those 100 leads, you got 2 clients. So it takes you roughly on average 50 leads to get 1 client. So that's 50 leads times 50, cost per lead, $2,500. We're back to a cost per acquisition. So what you do then is, would take out and go, it takes 50 leads to get 10,000. So we're going to divide $10,000, right? That's what you make, divided by the 50 leads it takes to make the 10,000. So that means it's $200. So on average, every lead that comes in is worth to you $200. You know your earnings per lead. So if you're spending and it's costing you $10 or $20 a lead, you know on average I make back $200 on this lead, right? So now if we work on the principle of max COGS of 40%, you can go 200 times 40% is $80. That means to stay profitable, now you know you can spend a maximum of $80 and be highly profitable. So rather than having to look at all the numbers, you do need to look at all the numbers because you could be pulling some levers, right? Maybe your show rate's really bad and you can get that up. Maybe your sales is not good, get some sales training, right? If you get all these things right, you know really well. But this is your backstop. So now you can go into Facebook and you can create a rule. If cost per leads is more than $80, turn off the ad. So you're covered, right? So now you know you can spend up to $80 and stay profitable. Now the question is, what is your EPL? And I'll invite you to go through this, to start looking at all your numbers, look at your P&L, get that pen out, and start working out what is your EPL. And that answers your question is, how much should you spend on a lead? Anything below, right, that 40% of that EPL. Now, for my legal eagles, welcome my friends, right? The legal disclaimer for our legal eagles. I have no qualifications in accounting. Don't take my word for anything I've said. This is my experience, what I've learned over time. Check everything with your business accountant, right? My legal friends, the information or service is for informational purposes only and is not intended for the personal financial advice, and there's an inherent risk involved with financial decisions. We are not to be held liable for decisions you make, because at the end of the day, it's all on you. Thanks for watching. If you'd like to see another video where I take you through an entire funnel of what it would look like in terms of what you need to do to set all this up, then watch this next video, which is appears somewhere here. Have a look at that, and I'll share with you in there everything you need to set up to run a really successful campaign. I'll see you inside the next video.